Hi, this is Peggy. So today we have an amazing guest, the CEO and founder of Hello Woofy. So tell us more, Arjun, about your company. Thank you for being here. We're very excited. You are the first investment recommendation I'm making, so very excited to have you.
It's awesome. Yeah, so we started Hello Woofy a few years ago, and I would say in a very succinct way, our whole mission is to build the largest company helping the smallest. And when I say the smallest, we're talking about underdogs, we're talking about small business owners. Majority of our customers tend to be women-led businesses. They tend to be in real estate, direct selling, podcasting, agencies, even work from home agencies. And so we're realizing that a lot of these companies, while there are a lot of competitors out there, and some of them have been around for decades, they haven't really been providing the cutting edge tools at a price point that's affordable. We like to say for the price of a cup of coffee or slightly expensive cup of coffee. And so that's where we come in, automating social, blogging, web stories, and audio marketing as well.
Yeah, and I didn't realize that it was mostly woman-led businesses, but it makes a lot of sense. A lot of women like me are, solo entrepreneur, and I can tell you as a SMB, I'm drowning with the digital marketing. So I'm like, oh my God, when I found you, I was like, that's miraculous. I have to work with this guy and invest in this guy. So
thank you.
yes, I'm a proud investor in Hello Woofy. So tell us more about your crowdfunding campaign. Actually, it's your second one, I know.
Yeah. So we actually stumbled into crowdfunding in a weird way. And so we back in 2019, we were in the process of relaunching the platform. We had spent some time on building it up to the level that we were okay with shipping it. And the summer of 2019, a TV show, which everyone may know, is Meet the Drapers by Tim Draper himself. We end up auditioning for them at the Republic office, the Republic, which is another crowdfunding platform, equity crowdfunding. And so they actually rejected us initially. And then I got an email a few weeks later, when I was actually at the hospital. My mom she actually passed away a few days later. And the email said basically, hey, we want you on the show. Can you make it? And how fast can you fly out to California? And so it was just a series of miracles. We ended up flying out to California. We ended up winning the TV show second place in season 3. And Tim invested 3 times in the company. The crowd, our customers, invested to the tune of about just under $600,000. And that's really what basically got us up and running. And we to date have done about 600,000 in revenue. We're projecting, give or take, we'll probably do about $1 million this year in revenue. So it's been a journey for sure getting here. But the point is, we did 2 campaigns on Republic as a result, and then we did a WeFunder campaign last year. I would say half of the capital, maybe a third of the capital, came from our presence on Clubhouse during the pandemic. Clubhouse came out of nowhere and really shot us up in terms of revenue and capital raise. So I would say about $100,000 came from Clubhouse. And then we did really well in WeFunder. We did really well in 2020. We were like, let's do it again. So then we launched another campaign, which is what's running right now. And we raised, as of now, about $306,000. So way more than what we had anticipated originally. But I'll just share my screen real quick and kind of show you it's such an interesting way to really build a business. But here it is. So we raised about $306,000. In the last campaign, we raised just under $600,000, $564,000. And then last year we raised about $203,000. So we raised about $1 million overall, a little over $1 million. And again, the people keep investing, small businesses keep investing. There's a huge upside. If customers can get discounts through membership, they can get free access. And it's really interesting because it's actually a part of our business model now. A lot of founders just look at crowdfunding as being a source of just like a blank check. But here at Hello Woofy, it's actually a part of our business model. It goes into our LTV, it goes into our cost of acquisition. So it's a very, very different way of going about it.
Yeah, we were discussing that offline, the fact that I love, crowdfunding also because a business like you, the investors become clients, become ambassadors. So even if you didn't need to raise through platform because VCs were throwing money at you, I think it's a smart. And and a great ROI marketing type campaign.
Yeah. No, absolutely. And so I can actually go ahead and share a little bit of that, what we were talking about before offline. So we love data. We're a data science, driven company, especially when it comes to marketing. But if you take a look at the conventional ways of investing, you're probably going to be looking at the LTV, which is, in our case, it's about, $615. This is USD dollars. And of course, all these numbers are subject to change. This is not a financial advice or any please do your own due diligence when investing. But if you take a look at what numbers we're seeing so far, LTV is about 615. The CAC, which is, the cost of customer acquisition cost, is roughly about, let's just say $100. It's a little less than that, but it's about $100, let's say. And then let's say the average cart, how much a customer is actually paying us is about 160, let's say $160. So if you combine, in the words of Glenn Arganbright, who's our lead investor and in the WeFunder campaign, and he's raised a lot of capital. He's sold a couple of companies, exited a few, others as well. He really, is a great entrepreneur to learn from, investor to learn from. And he says, typically a SaaS company does well when it has a 3-to-1 ratio, which is every dollar that, it goes out to acquire a customer, you get 3 back. In our case, even if you just take a look at these two numbers, 615, 615 and 100, take a look at these two numbers, right? It's almost a 1-to-6 ratio, which is a good thing. That's a really good metric to keep an eye out for. But the other thing I actually say is, if the average customers or the average investor / customer is putting in, let's say, $315, and the way I just did that was I took the total number of capital we raised through CF and just divided it. If you take a look at this number, if you take a look at the 315 and combine it, that's almost $900, $1,000. So then if you take a look at this number here and combine it with these two numbers here, you get almost a 10-to-1 ratio, which beats the 3-to-1 ratio, which is usually the rule of thumb for a SaaS company. So we actually say, hey, if the customer is going to invest, $315, they become an affiliate, they become an investor, they get a piece of the company, they become an ambassador, they tell other people, they become a great user, in terms of testing the new features and products and giving us feedback for free. There's just a huge upside to running a Reg CF campaign, which I wish more traditional VCs and angel investors would see. And hopefully, with your efforts, you're going to be able to help them understand the new way of running a company and raising capital.
Yeah, well, and our conversation is a great example of that.
Yeah.
Okay.
Yeah, exactly.
I love your company. I invest. I'm telling people. That's this snowball effect.
Exactly.
That you want. So a few questions for you on the growth side. Of course, you've been extremely successful so far, and I want you to continue. What is your go-to-market strategy? Or do you get your clients, or you differentiate yourself? Why do they sign for Hello Woofy?
Yeah, so it's a great question. So we get a lot of our clients through paid advertising. In fact, from day one, our return on ad spend has been positive. So what that means is, typically, and this is very unusual, but actually there's a lot of things unusual about us, but we're still successful. Majority of our capital has come in from the public, our customers. We raised over $1 million of the 1.4, 1.5 rate we raised. Majority of it came in from the people, which is unusual. The other thing which is also unusual is that typically when you start a campaign or you try to do paid advertising or whatnot, when you put out $1, let's say you put out $1 to advertise on Facebook, it's not always, and for the marketers on our platform or listening to this, you can probably agree, you don't always get a positive ROAS, which is return on ad spend. You may get maybe a 0.5, so every dollar you spend, you get 50 cents back, or maybe 70 cents back, or maybe 90 cents back. For us, from day one, we've actually been positive in the green every single campaign, every single quarter. So right now we're getting a 1.9, which means every dollar that goes out, we get $1.91 back blended, or we get a 1.5, 1.4 back from just pure ads in terms of new revenue. So it's basically a numbers game at that point. While it does take time to scale, about 30 to 60 days to scale if we increase ad spend, That's one of the reasons why we're raising capital, is that, we were only deploying maybe 10, 15, 20,000 a month in ad spend. We wanted to double that, triple that, we wanted to do way more, which is a good portion of the current capital raise is going into bringing in more customers. Now, this is most of our plans tend to be yearly licenses. So about 86% are yearly lifetime deals, which means customers locked in for the year. The customers also grandfathered in for their tenure of their service with us, and so they are they don't have to feel the pain of inflation or prices going up, and without their okay. So this is also very unusual. Most companies in SaaS don't sell yearly licenses majority of the time. They may do maybe 20%, maybe 30% of their licenses are yearly. The rest are month to month, which means that you have to you have to deal with churn every 30 days. In our case, after the 14-day money back guarantee is over, the customer is basically with us for 11 and a half months. Now, on top of that, with these amazing metrics that you're seeing here, let's say we get, I don't know, 30% churn, which is very high. Let's say we get a 30% churn, the following year, or maybe 40% churn. We've had the whole year to accrue the revenue, upsell the customer, other products and services. It's a very unique thing versus our other companies that have to live month to month. They only get 30 days to upsell, cross-sell the customer. We have the whole year to be able to do that. So a little unique there.
And I think what makes a lot of sense with your company compared to a lot of companies is the affordability of your solution. So I'm not blinking at signing 12 months because I see the value you're bringing, and I see that, well, it's affordable, like I'm not in that situation. Oh, but okay, thank you. I'm not in that situation where I'm like, oh my God, I need to dollop like $5,000, $5,000. And I'm like, I cannot do that, like, so,
Yeah, even our enterprise plan, which is the most cutting edge, it has audio marketing built in. It has a whole bunch of capabilities that allow you to reach customers in their homes so long as they opt in. That's only a little over $100. Our cheapest plans are like $4, $5, $6, and these are obviously discounted heavily from where they should be from a yearly or month-to-month based perspective.
Well, and I'm going to be honest with you. When I saw the pricing the first time, I thought it was per month. I didn't realize it was per year. And then I was like, oh my God, okay, I understand why you're saying a cup of coffee.
Well, the reason why we do that is because on the back end, what it allows us to do is use the data science, the data itself, to get the customer better recommendations. Because we have a lot of artificial intelligence that we baked into the product, but more importantly, and we have 2 patents that are going around the technology itself. So we have two fully issued patents. The patents become better and better. The data science gets better and better the more data we have. So the best way to do that is keep the prices low, get more feedback, iterate, and at some point the prices will go up a little bit. We've already increased prices, but without the data, you can make those decisions. And so we're entirely a data science company for small businesses. So if you take a look at, for example, even how we recommend words and emojis and hashtags, we've mapped out how the English language is actually formulated. Why does this word do well with this emoji that does well with this hashtag here, which does well with this hashtag? Well, love makes sense with, let's say heart, and, fitness makes sense with gym. So as you're typing inside our platform, we're doing the work with you and completing the copy so you can get it out the door.
Yeah, which, again, I can see the complexity of trying to figure out, okay, what is the right word to use to be better ranked. So last question for you, or maybe 2 last questions. The last question will be, what would be your exit strategy? And the last would be, what do you want to say to potential investors that are watching this video today?
Again, anything we're discussing today, please do your due diligence and your own research. This is not financial advice. One thing I do say is, as doing equity crowdfunding, knowing all the rules and regulations for SEC, what you can say, like, for example, you can invest as low as $100. It really matures the founder to think about, as they're getting ready to IPO, or as they're getting ready to go into the public scene. It really matures the founder if they're listening to their securities attorney, if they're listening to the platforms, their best practices. So like, for example, when you talk about exit strategy, obviously there's no guarantee here, but one of the things that we are constantly looking at is how are our competitors doing.
Yeah.
One of them happens to be very publicly traded. Their stock price went from 15, 20, something like that, to nearly 140, actually right here, nearly $144 during the pandemic. Why? Because they were in a category called digital marketing, but they charge hundreds, if not thousands of dollars to small businesses to use their platform, and they only do social. So we may very well, because we're doing so well in the public markets, we keep raising capital from complete strangers, our customers, we tend to do well. Who knows, we may list the company under WOFY as a ticker on NASDAQ in the next 3 to 4 years, but obviously no guarantees there.
Yep.
But if you take a look at our comparison, very simple, if you take a look on the right side, that's where they are in terms of the competition, what they offer. And you can see a lot of X's there because they don't offer, blog scheduling. They don't offer Google Web Stories for SEO, so that small businesses can be seen when people are searching for them. They don't have a graphic editor. We're developing a graphic editor. We're about halfway done, which will be baked in and automatically create graphics for the small business owner without any grunt work. There's no augmented reality. There's no Google Smart Chrome extension. There's no audio marketing. With so many nearly 500 million smart speakers in the world, how do we get small businesses in front of their customers in their homes? Well, we're now doing that, allowing you to do that, and that's something so unique to our platform that really all of our competitors, while we have a lot of respect for them, they've really fallen behind massively.
So if I look at as an investor, what I was very excited was obviously the traction you achieved, but also you want to see that the person in front of you wants to sell and can sell. It's not always the case, because I love the product. I think the product is amazing, but obviously as an investor, I want to make sure, it's getting sold. So, I think it's a great story. I mean, which is why I invested.
Oh, thank you. Virtual hugs to you. Thank you so much. No, I appreciate that. I mean, if you take a look at what we did in January, for example, we did just under 80,000 in sales, including the renewals and new revenue as well. And the last trailing 12 months, we've done 355, and we're projecting doing 1.2 to 1.5 million by the end of this year. And then if you take the ARR divided up by 12, you get our MRR, which is roughly just under $30,000. So these are impressive numbers, but we have a long way to go in terms of where we want to be. Like it's mentioned, 86% of our revenue is annual contracts. Our customers continue loving us. We get a great amount of press in terms of NASDAQ covered us. Not too long ago, VentureBeat covered us as well, and the landscape is continuing to expand. I mean, half the population on Earth is on social in some ways, but small businesses are still kept away. They have to do a lot of grunt work, and so we're coming in and saying we'll help you not only with social, blogging, web stories, audio marketing, graphic design. You just have to storytell, because that's what small businesses are really good for. Is they're really good at storytelling. Or community building is what we're looking to help them with.
Yeah, and I love the aspect of building a community. That's really helpful as well. So no, thank you so much for taking the time. I know you're obviously extremely busy, and I much appreciate, you explaining your business, the business model, the value for investors, and as you mentioned, please do your due diligence, people. But thank you so much for giving us more intelligence and opportunity to make an informed decision. So thank you so much for your time. Wishing you tons of luck, and looking forward to staying in touch, Arjun.
Thank you so much. Have a great day, guys.
Thank you so much. Take care. Bye.